The federal government loses $2 trillion every single year to waste, fraud, and pure bureaucratic incompetence. 2 trillion. That's not my number, that's the Government Accountability Office's estimate. And for the first time in history, we have technology capable of actually doing something about it. AI is coming to Washington. And I'm about to show you why that's one of the most bullish developments for both taxpayers and investors in the last 20 years. Let's get into it. First, you need to understand why government AI is fundamentally different from everything you've heard about ChatGPT and consumer applications. We're not talking about chatbots answering your questions about national parks. We're talking about pattern recognition systems processing millions of transactions per second, flagging fraud in real time, and automating processes that currently require armies of paper pushers. The Social Security Administration alone processes over 70 million claims annually. Medicare handles over 1 billion claims per year. Right now, humans review a tiny fraction of these for fraud. They just pay and hope for the best. AI changes that equation entirely. But here's where it gets interesting for your portfolio. Stop thinking about this as a political story. Start thinking about it as a procurement story. The federal government is the largest purchaser of goods and services on planet Earth. When they decide to modernize, the contracts are measured in billions, not millions. Now let's talk about the efficiency dividend and why this matters even if you don't own a single tech stock. The Peterson Foundation estimates that improper payments across federal programs exceeded $247 billion last year alone. That's money sent to the wrong people, for the wrong amounts, or for services never rendered. AI systems have demonstrated the ability to catch 60 to 80% of these errors before payment goes out. Do the math. Even a 50% reduction in improper payments returns over $120 billion annually to productive use. That's either lower deficits, lower taxes, or both. Either way, it's deflationary pressure in an economy that desperately needs it. And here's your pattern interrupt. Forget everything you think you know about government technology projects. Yes, government IT has historically been a disaster. Healthcare.gov, the IRS modernization failures. I get it, but this wave is different for 3 reasons. 1. Cloud infrastructure already exists. The government isn't building from scratch anymore. They're plugging into AWS GovCloud, Microsoft Azure Government, and Google's public sector offerings. 2. The talent pipeline reversed. Top AI engineers who would never consider government work are now consulting on 6-figure contracts because the problems are genuinely interesting at this scale. 3. Political alignment. This is the rare issue where both parties see upside. Efficiency appeals to fiscal conservatives. Better services appeal to progressives. That's a durable tailwind. So, who actually wins when AI penetrates federal operations? The obvious plays are the hyperscalers. Amazon, Microsoft, Google. They're already embedded in government cloud infrastructure, and they'll capture the compute spending. But the more interesting opportunities sit one level down. Palantir has quietly become the backbone of federal data analytics. Their government revenue grew 40% year over year, and AI integration accelerates their moat, not threatens it. Booz Allen Hamilton might sound boring, but they're the translation layer between cutting-edge AI and government implementation. Someone has to make these systems actually work within federal security requirements. That's specialized, high-margin consulting. Then there's the cybersecurity angle everyone's ignoring. More AI systems mean more attack surfaces. CrowdStrike, Palo Alto Networks, and the entire federal cybersecurity supply chain benefits from this build-out. But I need to give you the risk nobody's talking about. Implementation timelines in government are measured in years, not quarters. If you're buying these names expecting next quarter earnings beats from federal AI, you'll get frustrated and sell at exactly the wrong time. This is a 3 to 5 year thesis. The budget allocations are happening now. The RFPs are being written now, but the revenue recognition comes later. Position sizing matters, patience matters more. The other risk is political reversal. Elections happen, priorities shift. But here's my counter. The efficiency gains from AI are so dramatic that unwinding them becomes politically toxic. Nobody campaigns on making government slower and more expensive. So how do you actually position for this? If you're conservative, overweight the hyperscalers. They win regardless of which specific agencies adopt fastest. If you're willing to accept more volatility for higher upside, the pure-play government contractors offer better leverage to this specific theme. Either way, build positions in tranches. This story develops over years, not weeks. Dollar cost averaging beats trying to time the procurement cycle. The bottom line is this: AI in government isn't a threat. It's the most significant modernization opportunity since the internet connected federal systems in the 90s. The money is moving. The smart investors are positioning. The only question is whether you're paying attention. If this breakdown helped you see an opportunity others are missing, subscribe to the channel. I release data-driven analysis like this every single week. Hit the bell so you don't miss the next one. And drop a comment telling me which government AI play you're watching most closely. I'll see you in the next one.